All right, welcome back, guys. Welcome everyone. It's Monday and we're now in the afternoon. So it's Monday afternoon, August 25th. I've I just wanted to post a quick video of the different changes that happened in the market this week. And I know it's only Monday. It's only been about maybe a little over 24 hours or less than actually 24 hours since the market opened up for the week. And there's already been some movement and there's already actually been some changes, believe it or not, in my, I would say, directional bias for the different markets that I presented to you guys yesterday. So on what I anticipate happening and where I anticipate either buying or selling in the markets. So, for the people, honestly, this is really for the people who are not in my Discord. So, because I feel like if I put something out, you know, put out maybe directional biases, ideas on the directional bias that I could anticipate for, happening during the week, and only my Discord knows about it, then I feel like if it changes after I posted the video, then and there's people that's not in the Discord that are watching my YouTube videos, I feel like they could be left out. So I think I'm gonna put a video out for YouTube just to update the people who are not in the Discord. And if you're not in the Discord, it'll make it much easier for me to get the words across or the directional bias at least across. It would be much helpful for me to spread that type of value if you guys are in the Discord, the free Discord, rather than being not in the free Discord. So if you guys are not in the Discord yet, just click the link. It's in the bio or the description. Um, but yeah, I wanted to let you guys know, you guys already know I'm reading the next book that I've started reading is called Market Wizards by what's his name? Schwager. Um, Jack Schwager. So this book, Market Wizards by Jack Schwager, I think the first chapter was on Marcus, what's his name? Michael Marcus? Yeah, Michael Marcus. So first chapter was typically about Michael Marcus, and then the second chapter I'm now reading is about Bruce Kovner. So Bruce Kovner was brought in to trading, I think might have been commodities. I'm currently reading this chapter now about Bruce Kovner, so I'm explaining what I have recently picked up on it. So we both know that Michael Marcus and Bruce Kovner are both successful traders. So Michael Marcus hires, and this is when Bruce Kovner was looking to be an assistant for a brokerage, but Michael Marcus, instead of offering him the opportunity of being an assistant, he says, I have some good news and bad news. He said the bad news is like we're not hiring you as an assistant. The good news is we hired you as a broker. And I think they hired him as a commodities trader. Um uh so hired him as a trader. I don't know. I think I said broker, but hired Bruce Kovner as a trader instead of an assistant. So that's kind of where I'm at right now in this phase of the Bruce Kovner chapter, the second chapter. And I've highlighted a few things, and I feel like they could be valuable to somebody out there who was watching my videos, who is trading or anticipates trading in the future. So one of those one of those quotes are the first rule of trading. There are probably many first rules is don't get caught in a situation which you can lose a great deal of money for reasons you don't understand. So I think this is extremely I think this almost targets every trader because let's say you're someone who trades like how I used to trade, which is maxing out your trades. Like you throw $500 and then you just keep on clicking, positions for a point oh 0.05 lot, right? A point oh 0.05 lot size for gold or whatever until you just can't, trade anymore. Like that's honestly how I used to trade. And then I'd be so emotionally attached to the money that I'm losing, but I would have never been in that situation if it was for me being mindful of risk management. So I think risk management has a lot to do with this, but also not only risk management, but maybe if you're a price action, wait, I think it froze. Okay. So what I was saying is this quote, I'm gonna read it again. Let me know what you guys think in the comments. Don't get caught in a situation in which you can lose a great deal of money for reasons you don't understand. So if you have an intuition or if you see that price is doing something, maybe breaking a certain level on a specific time frame that you think um goes against your, strategy or the way that you trade, then I think it makes the most sense. It makes the most financial sense. It makes the most sense emotionally. Um, I think just in many different ways, it makes sense to exclude yourself and close out all positions pertaining to this market. Um, if also your intuition is telling you to do one thing instead of doing the other meaning staying in the trade. So there's two sides of the spectrum. You can A, remain in that trade, remain in that market while your intuition is telling you that something's up, something's off, something might be 50-50. Um, you know, there's too much like, going on in this market. Maybe the news might be going against your bias. I mean, even though, I wouldn't say news goes against your bias. I'm gonna take that back because a lot of times price pushes from news into a certain price point where the market actually goes in the favor of the retail traders. So, or, market movers, intentionally. So let's just go back to you have A and you have B. You can either go with A, which is the easiest, most convenient, uh, most least problematic, which is excluding yourself from the market and closing all positions in that market, or you can go with B, which is more problematic and it's fueled with, I would argue that it's fueled with more negative energy or even could be anxiety. I mean, it could also be depression, but I don't know. I guess I think that, you really have only two options. So I think this quote really opens up your minds and how to think about the decisions you make on whether going with A or B when it comes to certain things hindering, the progress of the market into your actual direction once you're in a position, a trading position. So you have two decisions to make, either remove yourself from the market like Bruce Kovner suggests, or you can stay in the market, which can have it can create negative energy. Um, and it can also financially, wipe you out or really just go against your bias. I think I think point A feels it's obviously the most safest because you can cut your losses short. Or you can use a stop trail. But yeah, just in case, for whatever reason, if let's say price actually, there was just a lot of people in the markets at that specific time. And then price continues to just push in your favor. So there's a couple different ones, honestly, that I feel like, is good to resonate with for traders. Let's see if I could find another one. So Jack Schwager asked, when you compare the trainees that made it to the majority who did not, excuse me, do you find any distinguishing traits? He says they are strong, independent, and contrary in the extreme. They are also to take positions others are unwilling to take, and they are disciplined enough to take the right position sizes. So this goes to show you that the traders that he's trained, and I think it was like I think it was out of 30. Let me see. I think it was like I tried to train perhaps 30 people and only four or five. Okay, so he said about out of about 30 people that he trained, only about four or five people actually seeing success. Everyone else, the rest of the 25 people that he trained to become a successful trader, they just they couldn't accomplish uh the level of success as a trader. And he was asked, why do you think that is? So he said it had nothing to do with their intelligence. And he said what was pretty much like the character traits that, they had. And it was they are strong, independent, and contrary in the extreme. They are able to take positions others are unwilling to take. They are disciplined enough to take the right size positions. So this clearly indicates that risk management, when he says position sizes, he's referring to the type of risk management that has a mental framework and roadmap to becoming a successful trader or a profitable trader at least, at the very least. Um, Independent, you can independently think on your own on whether you should buy or sell at, certain given times. And I mean, if he says strong, I would imagine when he says strong and independent, I would say just a forward thinker. That's what it seems like. I'll give you guys one more quote, and you guys can just tell me what you guys think in the comments about these quotes. Okay, so he showed me that if you apply to yourself, great things could happen. It is very easy to miss the point that you really can do it. He showed me that if you take a position and use discipline, you can actually make it. This is this is what Michael Marcus had pretty much taught him. He taught him that he can make millions of dollars. And that's a really good, oh, it looks like it froze again. I think that's a really good mentor. I think Michael Marcus for, convincing somebody that, not even really convincing, but opening up someone's mind to the opportunities of them being able to make millions of dollars. I think that's a great mentor. I think mentors should be able to open up people's minds as a mentor and guide them into the, right direction, of course, and show them that there is a way to an abundant mentality and just telling them that they can do it over the course of just discipline and pretty much just sticking with the process, not giving up. Um, yeah, so that's pretty much what I got from that. I'm gonna start showing you guys what I anticipate happening throughout the week. And I don't know, I feel like I might be bringing back Forex Factory so that we can start getting an idea on when to actually start looking at when to enter, when price, is at a certain point. Is this, I think this is the screen. You are sharing this screen. Okay, yeah. So right now we're looking at, oh, let me go back. All right, so we are looking at perfect. All right, so this is what we're going to be looking at right now. AUD JPY. Now, if we switch back to Forex Factory, you can see I'm going to do the filter. All right. thought I did the filter before, but I don't know why it like apply filter. So, if we're looking at, all right, today's Monday. It's about to be Tuesday, so we could anticipate the evening tomorrow seeing potentially a 1 hour market structure shift so that we can start seeing some bearish momentum against the Australian dollar. So Japanese dollar could very well cause a new daily low happening. So I'm really looking for this to happen. And I've got an alert around here just so that I know, you know, when to start looking out for that. So either close below this point around 95,661 or a market structure shift in the 1 hour time from around above 96,231. So that's a possibility. When it happens, I wouldn't look for retracement. Um, just because I know when JPY moves, honestly, sometimes it never even comes back. But I don't know. I guess we'll see. Hopefully, I don't miss on the opportunity to have to wait for the retracement. But that's pretty much what I'm looking at for AUD JPY. I did take a loss. I took that loss yesterday. I showed you guys I was entering around here, risking about 7%, and then I ended up blowing that. Not blowing it, but I took the L on that. So I'm already in the red for this week. UK 100. I am waiting for a retracement. I am waiting for a retracement to buy. I'm also waiting for a retracement to buy on NAS 100. Gold, I'm honestly not that interested in, but who knows what's about to happen with gold? I mean, the 4 hour is still bearish, but the 1 hour for some reason is bullish. And there is momentum on the 4 hour of being bullish. So, because you can see that, we're above the EMA and just a lot of buyers in the markets recently. So I'm not even sure. That's why I put low probability folders and I have high probability folders. So if I want to look at, what I'm like most likely going to enter for the week, like right at this, I'm not going to say time, but um, boom, you see. So, okay, so now we're looking at USD CAD. Now for USD CAD, I'm still looking for, price to obviously jump above 1.38711. And then, since we're looking at a huge imbalance right here, honestly looking for, I'm honestly looking for a 15-minute imbalance or market structure shift so that I can take price to about 0.35. So 1.35406. And that's a new low for the weekly time frame. Because the weekly, I'm not gonna lie, I don't really, I don't know. I mean, yeah, definitely. I would say the weekly is bearish, 100%. Um, I would definitely say the weekly is bearish. I definitely think the weekly is bearish. So I'm thinking weekly's bearish. We're also under EMA. I feel like this is the high, this is the low. So I've marked those both out. Daily time frame, even though the daily time frame is bearish or bullish, the 4 hour time frame has shifted from like it's done a big shift. DXY, I mean DXY on a daily time frame is bullish, but if you look at the weekly time frame, let's keep it a buck, it's bearish. And if we look at the 4 hour time frame, 4 hour time frame it is still bullish, but not ultimately bullish. Reason why is because it's already had a 4 hour shift. within the weekly time frame above the 50%. So it's a lot to think about. And I know it's kind of tough, but yeah, that's what's going on. That's what's going on. Yeah, I would not be surprised if DXY starts dropping below, targeting 95.934. So that's what's going on. And even the 4 hour is like right around the EMA. And I just think that, this is a level, a key level the, um, where price could just start, significantly dropping. Now, even if we look at the daily areas of interest, you can see price tends to reject this area. Like this is the rejection zone. Look, this is one, two, three. We got three touches around this area right here on the daily time frame since November of 2023. I mean, 23 to 24, 24 to 25. Yeah. So yeah, within the last 2 years, this is a key area of interest. So I'm gonna start looking for some sells, some short positions. Even the daily, there's a daily engulfed candle. It's engulfing the sell candle is engulfing the previous buying candle. So I think that's something to consider. That is pretty much my market update for today or for the week. Um, I've changed my percentages, so just so that you guys are aware. Oh, it feels like I think it froze again. I don't know why it does that. So the changes I made for A plus B plus C plus D plus E plus setups, A plus setups is gonna be 6%. Um B plus is gonna be 4%. So I don't have any 5%. Um C plus is gonna be 3%. D plus is gonna be, let me check. Got it in my notes. Should actually have it on the back of my where is it? There it is. So D plus is 1% and E plus is 2%. So it's kind of backwards, but I guess you can say I can change that. Yeah, I can definitely change that. I would probably put D plus as 2% and then I'll do E plus for 1%. So that's the change that I'll make. As you can see, like I actively make changes in uh this is why journaling is important. So that's pretty much it, guys. I'm super grateful that you guys have attended and watched this video. Stay tuned and like, comment, subscribe. Let me know what you guys think about, those quotes I gave for you guys today. I'll keep you guys up to date and posted on this journey. Super grateful that I can share with you guys. I think it's gonna be an incredible uh process. And thanks again for watching.